everyone. Welcome to the Scaling Stateside podcast. I'm David Rose, the founder and CEO at U.S. Expansion Partners, along with my co-host and co-founder, Matt Oxley. We are on a mission to help founders better understand the U.S. expansion journey, the pitfalls and best practices to hopefully give them a greater chance at success and faster success in the U.S. market. As part of that, we're hosting a series of conversations with founders and VCs who are funding U.S. expansion for their portfolio companies. And today we're very excited to have with us Marc Cohen, who is also an AI builder, but also on the VC side as well. So, Marc, thanks for making time to join us today. Please introduce yourself and tell us where in the world you are today.
Thank you for having me. I'm Marc. I'm in Guernsey, which, for those you don't know, small island between the UK and France, like 65,000 people or something. But we got some interesting people here. You want to know a little bit about me? I guess I was a maths undergrad at Cambridge a long time ago. I was a trader at banks, quit in 2001, did a master's in AI, built a couple of times in AI, including building the world's best poker AI, switched into VC, built my own portfolio, which is doing quite well, including Runna exit to Strava, which is very nice. Raised a fund, which we'll probably talk about because of the thesis, I guess, but and then post raising it, decided I didn't want to do it and give them the money back to the LPs and kind of, trying to play and figure out if I might want to build something with AI at the moment. And on the side, I do a little bit of stand-up, which is fun.
The first guest to say that's for sure. So, Marc, one of the things that we always like to talk to our guests about is take us all the way back to the beginning. What was your very first paid job?
So my very first paid job, and because I'm old, I might have to explain this, was a paper round. For those people that don't know, papers used to be physical and people used to have them delivered to their house, and they used to pay school children to go out in the cold and wet and do that and try not get bitten by dogs as they were putting newspapers through letterboxes. So that was my very first paying job.
All right, it's amazing how many people have said that. I mean, I think we'll have to start keeping metrics. The early hustle kind of sets the path for the career for sure. Well, let's fast forward a bit. So from the paper route, you end up at Cambridge in math, and then you started building AI or studying AI and researching AI. Talk about that part of your life that kind of led you to your professional career.
The bit that led me into AI is just like the sort of wildest set of random coincidences you've ever heard. So I went into banking trading side of things, which I really enjoyed. But a good friend of mine, my best friend at university, Emma, went to work for what was then Ernst & Young, now EY. Absolutely hated it. Couldn't have hated it more. Got a transfer, so I'm just going to go do this in Cape Town for a bit. I can go do that, a 3 or 6 month placement out there. Never left. Married the guy she first sat next to on the plane on her very first flight out there. I used to go visit her a lot, because she was a good friend. I became good friend with what became her husband and all of his friends. They're all surfers. I used to go on surf trips with them to places in the middle of nowhere, where literally we were the only Westerners. And on one of those trips, one of the people there, Eugene, gave me a book on AI, which at some point I read when I went home, and it interested me enough that at some point I quit my job and went and did a master's. So quite a random set of events to lead me down that path.
The first, I guess, application that you built was in poker. Were you already a poker player, or did you just kind of go AI to poker? Or were you poker to AI, I guess is the question.
I think someone had introduced me to poker. There's a funny story about this as well. Sorry, we are sidetracked, but for another funny story. So I was working for the Royal Bank of Canada. We were trying to hire a trainee for the desk. This trainee came and sat on the desk for a day or half of the day, in a few different spots, including sitting with me. He chose a different job. I then quit, got a better job offer, and went to work for NatWest. When I got there, I was given a new trainee, and it was the same guy who had turned down the previous job because he was going to have to sit next to me and be my trainee, and then ended up being my trainee in the new place. And he taught us all how to play poker. So I hadn't played much poker, but that was when I first got into poker, and then I was like, okay, this will be a fun thing to go and do when I went and quit and did that masters. So
love it. And then obviously AI, poker, and then into VC. Tell us kind of from operator, startup into VC. How did that come out?
How did that happen? Well, I think I was doing the AI in poker, and I brought that friend into the trading business because at that point I was doing like systematic trading and building systematic trading systems, and then I brought the friend in that I did the poker stuff with into the trading, and we did the trading thing. And that stopped at some point, and we moved here, and I didn't know what was next. And I was like, I've been fortunate enough to do sort of reasonably well out of that, and I was trying to figure out like the best way to invest my money. And also what was going to be next for me. And those two things kind of ended up coinciding. And that was before the whole sort of AI boom like started to kick off. So those things ended up converging as well.
And when you were kind of getting into venture, did you have a thesis? Was the thesis evolved over time? Because you started at 18. Am I right in saying that? And was that your own fund? Did you join a fund? What was the situation?
I joined that fund. I ended up sort of being co-owner of that business for a while, and then I sort of left to, I want to say, do it better. But like there wasn't like a huge underlying thesis from me at the beginning. That evolved over time to something that's obviously funnily enough, much more consistent with the podcast that I find myself on today.
Well, there we go. Lovely segue into your thesis, because background for everybody is like me and you appeared on a panel at the Into America House, which was fantastic conversation, and I've always been just absolutely fascinated by your thesis, and I'll say it, and then you can kind of tell me how badly I got it wrong. Is you started Unbundled to actually invest purely in tech companies that were going from the UK to the US.
Yeah. So a few reasons. I'll tell you how it started. So it started with Runna, which I was fortunate to be an investor in, that got bought by Strava last year. The founders at some point said, hey, we're going to start targeting the US market because it's like 10 to 20 times the size of the UK market. And I was a bit skeptical about that at first. Not that they were doing it. I was like, is it really 10 to 20 times the size? Like GDP at the time was like, I did the research, it's like 7 times. I was like, okay, well, it's still bigger. And then I asked them this and they were like, well, yeah, that's true. But like on the consumer side, actually people spend a lot more of their disposable income on like SaaS products. And then I did the research on the business side. And it's also true of businesses that they spend a big portion of their thing and they're happier to engage with early stage companies and they move faster. The second piece was there was literally one deal that I'd missed. And the sole question that the founder asked me, and I think I missed it just because I was late, actually. I was late to come to it. The sole question the founder asked me was, do you have a network of like USBCs that could help me like in the next round? And I was like, I got one. And he was like, actually, that's more than most. That's as many as any of the other ones that I'd asked. I was like, oh God, that's not thing. So at some point I did a speculative trip out to the US and I booked for a week. I had no meetings in my diary when I booked that trip. I said to my wife, worst case, I'll go. I want to meet VCs that can follow my portfolio, current or future. Worst case, I go for a week, work remotely for a week, come back. Not really any downside, but can I have permission to stay longer if I can turn meetings into meetings? I stayed for 3.5 weeks, met 38 funds. Wow. And the thing I got told again and again was like, why don't more people do this? Because like the only people that do show up for like, even from larger funds, they show up for 2 to 4 days and then we never see them again. So we humor them, but we don't really take them seriously, right? And so I was like, okay, well, this is interesting. All of a sudden, from like one wildly speculative trip, I magically have a better network than the vast majority of people out there. And then from a VC perspective, VC is all about outliers, right? it's very clear the returns are driven not by like how many winners you have, but like how big they are, right? And the US market being that much bigger, all of a sudden it's like, well, if you're not doing this, why the hell aren't you doing it? And so over time, the thesis then evolved to like, well, I only want to invest in those people because it's a filter for not just the potential for those biggest outcomes, but also people with the ambition to go do it. And I'm sure I've missed a few things out, but that was kind of the evolution.
And just digging a little bit into that, because I imagine you get pitched a lot. And I think there's a huge difference between a founder saying, yes, I'm going to go to the US and actually executing on it. How do you, what's your tell? What is that sign that you look for where it's like, all right, you're actually going to execute on this and you're going to deliver on this and I want to back you. What's that tell that you look for?
I think first is you can never be completely sure, right? Some people will just tell you what you want to hear. But like the question I will ask, or I'm listening, I would rather not have to ask, hope to hear, is they're going to move, right? Because I think it's probably less true in consumer, but it's certainly true in any kind of enterprise sales, even like, you know, SME. It just makes a difference if you're there. It really makes a difference if you're there. And even more important than that, it's a sign of that ambition level and that commitment that they'll do what it takes, right? If they'll do what it takes on that, they'll probably do what it takes on the other 20 things when it's like, oof, this is going to be hard, but I'm just going to do it anyway.
And what are the things that the founders come to you beyond the check and ask and need? And because obviously you're in there, you're introducing a kind of lead to them, you're going on the journey with them, right? And everybody manages their portfolio, but beyond the capital, what are the things that they come to you asking for help?
On the US angle in particular, I think it's like they don't know what those US investors are looking for. They've heard everyone like, oh, Silicon Valley, they're looking for this. It's different to Europe and this kind of thing. It's like they just want to know what that looks like and how to frame that message differently for US investors, that in particular.
What did those US investors, Mark, tell you, tell your portfolio companies about coming to pitch them? Did they say, hey, these are things that, you know, they can do better? Did you get any guidance or feedback from the US VCs?
Not specifically on that, but you're listening to what they're looking for, I think. And what they're typically looking for is they're less fixed on you must have this level of revenue to be at this point. And they're more in terms of how big can this be? I think they're also more on thinking more about like, are there 20 other people doing this than European VCs are? And look, there's always a distribution, right? And it varies, but in general, that's what they're looking for. The other thing I would say is that there is a stereotype of European founders, which is not necessarily fair, but they're sort of less ambitious, right? And less going for big outcome. And it's also true that the stereotype of European VCs. So you almost have to make sure that they're playing against that a little bit, right? So they don't necessarily say it up front, but they say things that show that that's obvious to sort of, so that they're not worried about it.
Let's talk about a specific deal. I think you said earlier that Runna was one of the biggest exits you had. Looking at the background information, I'm a big cyclist, so when a Strava makes an acquisition, it gets my attention. What got you excited about Runna? What did you learn about that through the exit process to a U.S. company?
So I wasn't involved in that exit process. They were doing that, but one of the things that got me excited on day one was I knew when I invested, you know, that they already had a significant minority of like US customers, and they hadn't even been trying to get them. And so that was in my head when I made that decision to invest, was like, okay, they have US customers. They didn't actually try and get those US customers. So there's something going on here that's quite positive. And I think in that specific business, you're like, the running, and it's probably true in cycling as well, culturally very similar, right, in the US as in the UK. And so some products, you're like, does this product actually solve a problem in the same way in this other country that you're going into? It's not always true. Here, there was both it felt like culturally it was very similar, and there was already some evidence that was the case.
And do you have that as part of your thesis when you're investing now?
Yes. So one of my things is like, actually, have you checked? So this is again for a founder that would be pitching me as like, have you checked that you solve a problem in the US? The most common vertical where this is hard is healthcare, right? Particularly because the US healthcare system and the sort of UK or European healthcare systems are so different that you could be solving an amazing problem both for whoever your business purchaser is and for like solving a real health problem in the UK. And then in the US, it's like, who's my buyer, right? Because they just have such different incentive sets that there may be no way to do it. And or you may need a different product, or it could be the same product, but you need an entirely different route to market. And so it's actually, have you thought about that? Because if you, again, going back to this, how do you know that they're really taking this seriously and not just saying the words? If they've actually thought about that, whether their product solves a problem for people in the US and that go to market, that tells you it's less likely to be words and more likely to be something that's really important to their roadmap.
And I guess one question, Mark, is when founders go to the US, right, as part of your thesis that you need to go there and win that US market. When you go there, do you notice changes in founders once they started operating in the US about how they start thinking? Do they start thinking more like US founders and with speed and aggressiveness? Do you notice those changes like physically in your interactions with them over time?
I think that it probably depends where they are because it is culturally different in different places. So if they move to the Bay Area, where that is the most true, right? That where they are just like, oh, we're trying to just go at like insane speed if we can. They will just inherit some of that just from being around those people. You know, this thing where you say you become like the sort of average of the 5 people that you spend the most time with. Founders are most like that in the Bay Area, so you're more likely to see those changes of founders there. And as you move away from the Bay Area, depending where you are, that like intensity on average shrinks.
And for any founder that is thinking of going to the US, they're about to book their ticket, they're kind of like, all right, okay, I'm going to go and give this a go. What are the top recommendations that you would have for those individuals?
So it depends what they're going. If they're actually, I'm moving and they're doing it. But like if they're going, I'm going home to the US just to see what it's all about, is actually have enough time. Again, don't be that person that shows up to two to 4 days. Because I think people just, when I went, people were like, oh, you're staying for this long? Just that shows a certain level of commitment and that you're prepared to turn up and like try and make things happen. You're going to have to hustle, right? Because you're going to meet all those US founders and they've all got so much hustle. Right. And if you don't, you're just not going to whip. Again, this is something you might pick up when you get there. And I think there's also can be a perception, particularly among early stage founders, that it's much easier to raise in the US. It isn't any easier. There's a lot of money, but there's also a lot of people competing for that money. So you still got to be good. Yes, there's a set of investors that maybe think a little bit differently to European investors, but don't think that that's going to be easy.
Can you unpack the hustle bit a little bit more? Because this is, I think, something that, we talk about a lot, but I think once people get on the ground, it surprises them. And I always use the anecdote of, I had 2 kids in America, and from the age of 4, they're doing show and tell, which is basically demonstrating why their pen is better than their classmate's pen. So they're selling. They're understanding their audience, like they're getting into that psyche. We don't do that in the UK, or we didn't when I was growing up, right? So, the hustle surprises people, but I'd love you just to unpack your perspective on that hustle. What is it? What is it people are doing? How do people adapt to that kind of environment?
Yeah, I don't know. Hustle is like kind of a strange thing to describe because it's kind of a set of things that you do and an attitude as well. Because it's kind of like, oh, right. Hustle means that you manage to achieve things by ways that are sort of kind of aren't obvious and almost that by definition everyone else isn't doing, right? So like in my case, I had to be prepared to go, I'm going to go for a week, and if I don't get any meetings, this is fine. But I'm going to hang around and just keep trying to turn meetings into meetings, right? It's like, how do you, and it's like the same thing, people go, I'll give another example. People go, well, how do you raise money? What is that path that means you can raise money? It's like, well, by definition, there can't be one, right? Because if there was, everyone would do it and everyone would raise money. If I could give you the answer that tells you what that thing would be, then it's almost meaningless, right? Because that then would become table stakes and everyone would be doing it. It's like, what's the thing you're doing that nobody else is? So like, this is sort of a non-answer, but
No, it's so true, because I also believe that sometimes as founders and entrepreneurs, you need to go through what you need to go through to get the experience on the other side to therefore deploy it. Okay, and that is the hard way, but sometimes it's the only way you're going to get that experience.
Yeah, you got to go, well, how do I show up and get, everyone goes, oh, you show up, you can meet this person will introduce you, this one will introduce you, but like, yeah, but that doesn't mean you're going to get a meeting with like, you know, Ben Horowitz at A16Z, because he's going to take like no meetings, right? It's just, by definition, it's hard. You just got to find, it's like finding a way and having like the attitude that you're going to go, I'm just going to figure this out and I'm going to try hard enough and just be a little creative as well. I mean, I don't know. It's quite hard to say what those things are, to be honest.
Yeah, I think America is a state of mind, and expanding in America is a state of mind. And I think it's kind of very much the door shuts, you got to find the window kind of mentality. Yeah, and that to me is the hustle that is required. But also what I do think is that some founders, when they go over there, and David says this all the time, are looking for the easy button. They're not really kind of prepared to go through what they need to go through to get them set up for success. And I think it's just having the tenacity and the ability and desire to actually want to absorb some of the hard things, knowing that it's actually going to make you a better entrepreneur. And that is a state of mind. You know, so it's such an interesting topic, because it comes up again and again, like the hustle side of it and what you're going into.
Yeah, I mean, it's a state of mind, and then the actual doing, right? So you still then got to go, well, okay, I'm going to actually do the things as well. Like, how do I get a meeting? I'm going to do cold out. I'm going to ask for warm intros. I'm going to try and do cold outreach. I'm going to turn up to some networking events and talk to like 10 people that I've never spoken to before, and maybe I have to be a bit cold and move on if I think that isn't useful, which isn't very nice, but that's still what you've got to go and do. And probably 5 of those events I won't get any useful introductions to, but I'm still going to go to the 6th one, and like and I'm going to do that cold outreach on LinkedIn that like probably, I've done that 3 days in a row to like 10 or 20 people and no one's replied to anything, but I'm going to keep going. This person likes to, you know, play golf. Maybe don't, so I'm going to go and do this. Or like, don't turn up at their kid's school to watch them play football. Don't do that. I would say, like, I'm just like trying to like, think, like maybe there were some limits. You might like terrify them. Maybe they'll take the meeting if you say, I promise not to turn up at your kid's school thing. I don't know. But like, this is the sort of thing we're talking about. You got like kind of like go, I don't know how to do that, but like, I want to meet this person. Maybe it's impossible, but I'm going to give it like everything that I've got.
Mark, you recently announced that you're going to be returning funds to LPs. That is a highly unusual move. Talk us through that decision making, and also I'm curious about the LPs' responses when you call them up and said you're going to return their funds.
So there's some reasons. I'm not going to go into all those reasons, but like the LPs actually super supportive. Like couldn't have been more supportive. All like very kind and going, and actually quite a few went, actually, if you do this again, then let me know. Also, 1 or 2 that went, actually, my personal circumstances have changed. So while I would have gone and given you all the money and done all this and it would have been fun, I wouldn't have meant anything, but actually this is still helpful. Thank you. So like, that's quite funny. And I think I was just like, actually, there were a whole load of reasons. So I would say, but like side reasons, which were not the main reasons, but things that I'm enjoying about not being in that situation now. Although I'm going through all the sort of wind down admin, which is like you got to do, but not that interesting. It's like I'm having fun. I'm playing stuff. I'm building stuff in for myself now, right? Which is like useful and could be productizable or not. Maybe not. It's probably not exactly the right use of my time, but I haven't decided I want to do that. I'm being open-minded about where all those paths might lead. But yeah, I hope that answered the question.
All right, fair enough. And so, what advice? So you've talked to a lot of founders about coming to the U.S. What is the top advice you give them about going, or is it to go? What is the one thing you want to make sure any founder thinking about coming to the U.S. knows based on what you've learned to date?
Oh, I think you just got to be committed to doing it, right? You have to actually want to do it and be committed. It's like, would you move? Like, are you all in 100% to go and do this? Because those, and if they're not, I won't even make the introductions because they're wasting my time. They're wasting those VCs' time, and those people aren't going to give them money anyway, right? And so it's like, that's what those VCs want. They want to know you're committed one way or another. What does that actually mean to you? Is this your primary market? Are you going to move? Like, and can you evidence to me that this is something that you are taking seriously and plan to take seriously? And if you're not, don't try, because they will spot it and you are wasting everybody's time. But if you are, they will take you seriously, and they will take you as seriously as any US founder if they think you're committed.
One thing we see differently, I guess, in when European founders first start coming to the U.S. is I think the European founders have been beat to death by their European investors about profitability. And I'm always trying to explain, like don't use that word. That's a bad word when raising in the U.S. Do you have to coach? Do you have to coach founders? Or what do you tell them when they're like proudly telling you how profitable they are before they go to the U.S. market?
It's like the deck that says, "Oh, we're going to be profitable in 2 years' time." I was like, it's just like, no, you're not. It's like, you see it in lots of decks. One is also, it's not like what that is. That's really for like mainly for angel investors, right? UK, there's a profile of UK angel investor that wants to go, hey, I'm going to be profitable now. We won't need any more money, and I'm going to exit to this thing in this period of time. And it is the opposite of what any good investor wants to hear, because the good investor doesn't care, I want to be profitable here. The good investor wants to know, I am going to build this huge business that, yes, will be profitable, immensely profitable at scale, and then we won't even have to think about an exit. We're going to IPO, or we'll be buying people, not people will be buying us, or we'll do a Stripe and stay private forever, or whatever it is. It's like, but we're going to build this insanely big business, and it is like entirely the opposite of what an angel investor wants to hear. The challenge is, if you're trying to raise from both sets of people at the same time and they want different answers, but like, yeah, that's not. The main thing is you need to know how your investor base thinks, right? What do they think? And then actually only take money from them if you're aligned with them, if you actually want to do that, right? Don't be telling this person this and this person two different stories, because like you're going to have to make some decisions about how you run your business along the way. And you're going to piss someone off if you don't do that. And actually, you probably won't get what you want either.
How much hand-holding do you have to do? So you've got a European founder, you're backing them, you're supporting them, you're kind of holding their hand as they're going through the process. What coaching do you frequently have to do when they're engaging with US VCs?
So I think in general, what I tell founders is like, I'll be anything from a frictionless investor to like your first coin. I'm happy to be anywhere along the scale. And you'd be surprised how much founders' eyes light up when they hear that, which tells you something about like how much of a pain in the backside most investors are, I think. But in terms of handholding, I'll let them get on with it. I want them to be here if they do it. And I think it is, if they want to raise from that US they'll go, oh, hey, can you help me raise here from someone in the US? I was like, okay, have you got a deck? And have you got your like tight bullets? And they're like, and then you look at it's not stuff that's actually that different to if they were raising somewhere else. Cause like is the deck any good? Do I think this deck is going to get people's attention? If I'm emailing someone to take a meeting, I need to get their attention beforehand. And actually in the US, it's worse. It is in the US worse because some of those people get so many, right? There are people that get 10,000 decks, they get 50,000 decks. And so it's like, not only do you need those tight bullets, but you need that first email subject title to be good, or no one's even going to look at the bullets. Then those bullets have got to get their attention that they open the deck. Then that first slide or 2 slides has got to get their attention that they're actually going to bother to read the rest of it. And it's the tightness of each piece. And it's more important in the US than it is in Europe, but it's still important in Europe as well, I would say. But it's just not there. It's very rarely there and tight. And I'd say I'm as bad as anybody else. I had my own deck when I was out raising my fund, and like mine probably wasn't as good at that as I would liked it to have been either. So I'm just as guilty of it.
Well, yeah, because I think there's a stat out there. It's like VCs make their decision, the first decision, the first 45 seconds, right? They're reviewing it. You've got 2 slides, whatever it is, and then I guess there's a kind of, it's not a translation thing, but it's like, right, how do you get them prepared, right? Because I think there's the kind of like, here's the deck, here's the message, here's the bullet points, because you're putting your professional reputation on the line as well. It's like you've worked long and hard to build this broad network in the US. This is your thesis. What's that kind of pep talk that you're giving them prior? It's like, you got the materials. I'm connecting you to Barbara, who's killer. Right, you got to go in there and impress. Off you go. What's that pep talk?
I think most thing they most need to understand is like to get inside the heads of the people they're talking to. Like, what do they care about, right? And if you think about what they care about, you can present stuff in the same way that you go, okay, like the content's the same, but like I'm giving this to them in the way that meets what they're looking for. And it's no different actually to if you're doing sales, right? If you're selling to a client, it's like not just I have this product and it does X. Like, what does that client actually care about? You go, okay, well, I'm presenting this in a way, it's exactly the same product, but I'm presenting in a way that makes sense for what they are looking for, right? And so like for a VC, it's like they're looking for something that potentially has a huge market and great people to do it and is really solving a real problem, right? Particularly if it's early, it's not 100% clear. If you are like A or B or whatever, you've probably got enough revenue, you're at least proved you're solving a problem for someone. So it's like, that's what they're thinking for and wanting to they're trying to figure out to go, do I want to consider this as an investment? So you have to then present your thing in a way that meets what those filters are, right? What are they trying to do? What do they think they can sell to their investment committee? Because they got to go and do that as well. Am I in remit, right? Does this even fit your remit, right? And actually you go in and go, am I wasting your time? Like, it's like this, it's just like, need to, all those things.
But that's a really interesting point, because we speak to so many founders, like they go, I sent 3,000 emails and I didn't get a response. I'm like, well, have you understood the remit? Have you understood the partner that's involved for this? Have you really gone out on X or whatever it might be and find out who knows more about the problem that you're solving than you? And I think that is the gap that I think founders go through, because again, to David's point, it's like they want the easy button. It's like, right.
If they sent 3,000 emails, none of those were personalized, right? I get those and I'm like, well, that's out of remit. That's out. If you've sent me one and it's clearly wildly out of remit, you don't think, that's getting marked as spam, right? Yeah. It's not just it's getting marked as spam, which means it's less likely to get through to the person that you actually wanted to get through, because you sent something which is like, you didn't bother this. Or the person you could have personalized it to, you personalized it to badly because... right. And so because it just didn't have that much care and attention. So there are some great tools out there that can enable you to do this really well, but make sure that it actually read some of those emails and check them against some of the people that you've sent them to, that you're sending them to, and go, has actually been written well? Has it been written badly that it's just going to piss off the person that you do want to get the attention of?
Yeah. Cause I think, the guidance that we give is, it's not quantity, it's quality. So go and discover who those 20 individuals are, you mentioned it before, maybe don't stalk them, but be very creative about how you engage with them and get your business in front of them.
Yeah, there's no harm in doing cold outreach. This is all fine. And actually, it is to a certain extent a numbers game, right? You do want to get it in front of like as many people as possible, but you don't want to get a shitty pitch in front of as many people as possible, right? Which means that they're going, well, because then you're just going to kill all your chances. And if they've said no once, like you might have lost your shot, actually. So that's the risk if you're doing it that way.
Mark, are there companies, and you can name names or not if you like, are there companies, European companies right now you think are really being built for US scale that you are excited about, even if you're not involved, that you're kind of looking at watching from the sidelines? Is there a company that either profile wise or industry wise or sector wise you're like really excited about?
So I'm probably not paying enough attention to ones that I'm not investing in, if I'm honest. So I don't really have anyone to call out, I'm afraid.
Fair enough.
And also, we don't condone insider trading.
Yeah, absolutely not. No, don't do anything illegal. Don't kidnap their kids and then say you can have them back if you put some money in.
We've gone from stalking to kidnapping. This is not good guidance.
Did that go far? Did that go too fast?
Oh, I love it.
Well, Mark, is there any topics, again, we're trying to help founders prepare for the U.S. expansion journey and U.S. fundraising journey. Are there any topics we haven't touched on today you want to make sure that a founder who's starting this process needs to hear before they get started?
Yeah, I think so. We covered them a bit, Matt. I think when we were on that panel, one thing is like the Delaware flip is a thing that people talk about. Is like you just have to be prepared to do it. It's not that hard. It's probably going to cost quite a bit of money. You don't need to do it until you have an investor that says they want you to do it. They just want to know you be prepared to do it. And then one of the other things that I think we spoke about was like, where are you going to go? Where in the US are you going to go? And what are the considerations? Well, if it's capital, like there's a whole load of considerations. Obviously, most capital is in the Bay Area. Then there's quite a lot of New York. And then there's lots of little different areas. Where are your customers? That's a thing that you sometimes want to be physically close to your customers. You don't necessarily want to be looking for an acquisition, but you might want to be near potential acquirers at some point in the future. There's no harm in that because they may also be potential partners from you. There are all sorts of tax incentive schemes all over the US that you absolutely should not be ignoring, and so you should be looking to see what those things are. Where's talent, right? So where do you think the talent that you need to hire is best acquired? So if you're going to go and build a US headquarters, that's one of the considerations. So I think there's a whole, when you're going, the default is I'll just go to the Bay Area. And that is the right answer for lots of people, but there are more considerations than that. And you should have all of those things in mind before you make a decision. I think also for some of those areas, some funds, when you get outside the Bay Area in New York, a lot of the funds, if they're local to that, will only invest have like a regional remit. So for example, in Seattle, they'll have a Pacific North, which has like a great actually load of software engineers and AI engineers like there. But there's a lot of the funds there have a remit to invest only in the Pacific Northwest. So if you get there, you do become accessible, and you're moving there, you will become within remit for some of those funds. So I think, there's probably like another 5 considerations as well, but there's a chunk of things there to think about.
Great. Well, Mark, this has been really great. We really appreciate you sharing your story with us. We're excited to see what you're going to do next beyond your stand-up career, which is obviously going to be huge. But after that, we're kind of curious, are you going to build some more? Are you going to invest in more? Maybe do some of both. So please keep us posted.
Will do. And thank you both for having me on.
And where do people find you if they want to kind of follow your story, Mark? Do you want to just share that?
Yeah, I'm on LinkedIn. If you search for me, you'll find me on LinkedIn. A profile picture has me with one of my kids sat on my shoulders. Unbundled.vc is my website. Come find me. Come say hello.
Fantastic. Well, look, it's been an absolute pleasure, privilege. Always enjoyed our conversations, panels. So thank you very much for joining today. Really do appreciate it.
Cheers. I enjoyed it too.